we are off to the races. The stock market officially open for trade in one of the final weeks of 2024. What a run it's been for the major indexes. The S&P up about 27%. I do want to bring in my guest to talk more about markets. Thomas Hayes, Chair and Managing Member at Great Hill Capital. Thomas, always great to see you, especially as we get set to wrap what has been a very eventful year.
Yeah, no question about it. They're excited down there, and they have every right to be, because I think we're in the period, Kristen, where seasonality is becoming favorable. We just got through tax loss selling season. We saw some weakness there the last week. People were getting nervous. A little bit of anxiety about the Fed meeting this week, but it looks like for sure they're going to be cutting 95% plus odds of a cut this week. So as we move out of tax loss selling season, guess what comes to town? I think we're moving towards the Santa Claus rally, a little bit of strength into year end, despite having such strength all year long.
Yeah, it has been a lot of strength that we've seen here, and expectations, I would say, are pretty high for 2025. How does that set us up in the markets?
Yeah, I think one of the things that is critical that's happening right now is the global easing cycle. We've had 64 Fed cuts so far this year, another one on tap hopefully this week. And that is the most amount of easing that we've seen since 2020 and 2009. So while it feels toppy, those were periods when you wanted to be a buyer of stocks, not a seller of stocks. But I do think it's going to be nuanced moving forward. As a matter of fact, when we look at correlations of individual stocks, going back to 2001, correlations are now at the lowest level. And what that boded well for was not a continuation of tech, which you saw into 2000, but actually a wide broadening, in our case right now, the unmagnificent 493. And what you saw in 2001 to 2007, small caps started to dramatically outperform.
Yes.
And believe it or not, emerging markets, which no one is positioned for, no one's interested in. It's American exceptionalism. No one wants those stocks. But if you go back to Trump 1.0, they did quite well.
Interesting. So you seem to be optimistic on emerging markets. Is that the case, Thomas?
I think you want to have some ex-U.S. I think you want to have some emerging markets. I think you want to have some non-U.S. And I think the U.S. will continue to do fine. I think we have to have a little bit slightly more subdued expectations. You know, we're not necessarily going to get 27% two years in a row or plus 23 years in a row, but I think it'll be okay. I do think you'll see some moderation in the heaviest weights in the S&P 500, which will weigh on the indices. So 2025 stock pickers market, if you're in the indices, you're going to be okay. You're not going to be throwing parties, but 8, 10, 12%, you're happy. Underneath the surface, you can make a tremendous amount of money in that type of environment. That's where stock picking, fundamental analysis really come to bear.
Let's talk about some of the sectors, as well as perhaps some of the stocks on your radar.
Yeah. I think it's time for XBI. I know we've been on together. I've talked about Biotech. Well, they've finally come aggressively off that bottom. It's taken a couple years to consolidate the losses. And now we're at the level where I think the next phase we're gonna start to move higher. I think you've got two things working in favor: deals and drugs. So deals, FTC is going to be much more favorable with mergers and acquisition, and drugs, FDA is going to be putting things out more aggressively. Couple that with the fact that large pharma has more cash on the balance sheet than they've had in decades, and they have a lot of drugs coming off of patents. So it's much easier to buy innovation at low valuations, historically low valuations in the biotech sector, than build it from scratch, which takes a lot of time. So we like biotech.
What does this mean for volatility?
That's a good question. Moving forward, look, we're at very compressed volatility right now. Historically, what you see is strength into an inauguration, and then afterwards it gets a little choppy. So it wouldn't shock me if we got a little bit of volatility late January, early February, normal pullbacks, 5-10% type of pullbacks, and then a modestly good year for the overall indices next year.
Interesting. And in terms of the new administration, of course, we saw the president-elect here at the stock exchange on Thursday, as well as many different members of his cabinet. How is that shaping your investment thesis, Thomas?
You know, it's pro-business, it's let animal spirits run, it's deregulation. This is a very positive thing. We want to be in those companies that have actually been beaten down. You know, one of the companies we like, which you can't give it away right now, is called VF Corp. Okay, Bracken Darrell is the new CEO for the last year. He came from Logitech. At Logitech, he took a stock that was down 82%, and created a 25 bagger in 8 years. He's doing the exact same thing. He's taken solvency risk off the table by selling Supreme, paying out $1.5 billion of debt. He's got the new collaboration with Kim Kardashian, North Face and Skims, that's going. Vans is stabilizing, Timberland is a solid brand, and Dickies will do okay. So we definitely are betting on Bracken Darrell here.
Is Bitcoin on your radar?
It's not. I'm an equity manager. Kudos, there are a lot of ways to make money. For me, that's not one of them, but I've got a lot of friends that have done extremely well in the crypto space. Very
quickly, in just about 20 seconds, Thomas, anything you want to hear in particular that will shape your thesis from the Fed chair on Wednesday?
It wouldn't. Number one, I think he's got to acknowledge that he's still in an aggressively restrictive stance, number one. And number two, it really wouldn't surprise me if he does pause for a while, and I hope I think the market is prepared for that. Get that cut in. He front-loaded a lot of cuts, and then maybe see what happens for the next few months before you get too aggressively. Let's watch the inflation numbers. But I think maybe one, maybe two cuts may be all that's needed in 2025 after this.
All right, Thomas Hayes, Chair and Managing Member at Great Hill Capital. Thomas, always a pleasure. Thanks so much.
Thanks for having me, Kristen.